My next guest is expecting all of this bullish momentum to continue. He says investors should look past any soft patches and focus on what's working. Jim Caron is CIO of Cross Asset Solutions at Morgan Stanley Investment Management. I'm not saying you're recommending Bitcoin. Maybe you are. I don't know.
I'm not.
I don't know.
It's not part of it.
Palantir. No. What is driving this momentum? Is it the little fear and greed index is back to, I think, greed or extreme greed levels. But what do you think is really going on here?
So in some cases, it's almost like the dog that didn't bark, right? So what I've been saying since the beginning of the year is that there are a couple of things that are going on in terms of policy. One is deregulation, two is tariffs, and three is budget and taxes. Everybody focuses on tariffs. Tariffs are a negative. Tariffs are a tax on profit margins and a tax on earnings. But the other two are positives, right? So the deregulation is a positive. It reduces cost. And also the tax and budget program, now that we have clarity on that, now that we know what that is, also a cost reducer. So
for businesses.
For businesses. So effectively, you have tariffs on one side, which are a cost, and then you have the cost reducers. Everybody focuses on the cost piece of this, which is the tariff part. So what I think is happening is people's forward look past the soft patch, potentially in the second half of this year, is that there will be better operating leverage for earnings going forward, and people are willing to buy into these multiples here.
It's poetic. We're saying this as the S&P has just hit another record intraday high, so congratulations to them. A lot of people would say, well, earnings, the estimates in the back half don't look as strong. We think inflation's going to be stickier. I mean, speak to some of those concerns that others on Wall Street have. Yeah,
look, I mean, I get it. And I am in the camp that we are going to get worse data over the next 6 months. I think that the growth trajectory is going to be a bit lower. I take the Fed's estimates, I think that they're on the right track. I think inflation might even be a little bit higher. The question is will it matter for asset prices? And I think a lot of that is baked into the cake. And the reason why I say that is that if you look at people's growth estimates or even earnings estimates from the start of this year to where they are today, it's lower still. So people have taken into account the tariff shock. But with the recovery in markets, and like you just said, we're making new all-time highs,
right.
They're not increasing their earnings projections. They're not changing their growth forecasts at this point because we still have tariffs and the uncertainty that's still looming. What I'm saying is that what if the growth shock and what if therefore the earnings shock isn't as bad,
right.
then there's upside surprise.